Hey everyone, this episode is brought to you by River, the place that I personally go to securely invest in Bitcoin with confidence and with zero fees. And now, with Bitcoin interest on cash, you can even earn daily Bitcoin interest on your cash balance.
Because of the Bitcoin Treasury playbook that Strategy is deploying, they have an edge. They have alpha that they're offering to the market. You can basically ride Bitcoin and outperform everything else. And all you have to do is hand over your dollars to Strategy, and they will convert that into Bitcoin for you and be able to service this debt at a mispriced risk rate, basically paying you more than the risk you're taking.
So I got a little excited when I saw you talking about this new MicroStrategy preferred. I was having a little bit of a different take on this, and that's why I really want to talk to you. So I want to hear your point of view, and then maybe I'll throw out maybe a contrarian take or whatever. I don't know, but take it away. What are your thoughts? So this is the second preferred issuance that they're doing. Give people just a real basic overview.
Okay.
Preferred stock so that they can understand the context of that, and then we'll go into the more nuanced financial.
Okay. Yeah. Well, there's a lot of depth here. Okay. So everybody's familiar with MSTR. That's MicroStrategy now Strategy, and their stock is MSTR. And they've been doing the Bitcoin Treasury playbook for 4 years now. And they've landed on their key metric, which is Bitcoin yield. So their whole goal right now is to use the capital markets in order to raise money to buy Bitcoin in a way that adds Bitcoin per share. So it's accretive dilution. That's what they've been working on for a handful of years now. First they converted their balance sheet into Bitcoin. Great. And then they were like, what other things can we do? They've been focused on doing convertible notes for the last few years, raising debt that has an embedded call option. So that's the convert part. You can convert it to equity at a certain price. And that's what they've been doing, and that's how they've been raising money and buying Bitcoin. And recently, they've greatly upgraded their machinery for how they're raising money to buy Bitcoin. And those two things that they've rolled out now is STRK, Strike, and STRF, Strife. And the first, Strike, is a preferred stock version of a convertible note. And so they've cleverly packaged convertible notes features and benefits into a preferred stock offering that is basically paying out like a bond and has an embedded call option in it. That's what you get when you're buying STRK Strike. So that's Strike. And now they've rolled out Strife most recently. And Strife is a ordinary bond repackaged as a preferred stock offering. So the whole point there is it takes away the convertible portion of the Strike offering. So there's no call option in Strife. And instead, it's slightly higher annual dividend, really effectively annual interest rate. That, I think, is how they're going to be able to access a much larger portion of the bond market. And I think that these two vehicles, Strike and Strife, are how Strategy is going to fuel the next leg of their mission to onboard a vast amount of capital to Bitcoin.
So just real simply, when I'm looking at these, and just to put these into context, if we look at all of the preferred stock that's been issued leading up to Strife, which is the new one, which he was originally trying to raise 500 million. I guess it's oversubscribed. 711 million is what they're going to raise in this. But prior to that, the amount of interest expense and also the dividends that were paid out of the first preferred stock offering, which wasn't mandatory that it had to be paid in cash. He could just issue more common stock to make those dividend payments on the first preferred. But to try to frame this for people, all of the interest expense that he had was about 50 million on an annualized basis for everything before Strife. When we look at the income, just think about, we're using a lot of fancy terms here, and I'm just trying to make this really simple for people to kind of understand. if you look at the earnings, the profit that MicroStrategy is bringing in on an annualized basis, and this is averaged over 3 to 4 years, it's about, call it $75 million, just to kind of make these numbers very round and very digestible. So when we look at the mandatory interest expense that he had to pay from the convertible debt deals and things like that, 50 million and 75 million is the profit. So there's about a $25 million buffer that's left over that's still, they could take that 25 million, they could buy more Bitcoin and put it on their balance sheet. They could do whatever they want with that additional 25 million. That's how much was left over prior to this most recent preferred stock issuance, which, and this is a really important point, has to be paid in cash. So I think that's a really big difference between the first one, which is an 8% dividend, and this one's a 10% dividend. Is the first one, if he doesn't have the cash, he can just basically print some more shareholder certificates and mail those to the people at the interest rate that the 8% that it's at. So this is, I think this, and I don't want to push into.
No, I see. This is the conversation to have. Let's get into it.
But I also, you had some framing around this. So before we go any further down that path, because the dividend amounts to, and the fact that it's oversubscribed, it's 700. If he issued at the amount of 500, there's 50 million that he's got to come up with on an annualized basis, which now, instead of being 25 million in the green, they're 25 million in the red on an annualized basis, which means they have to come up with more profit somehow, some way. And, there's some ideas around how that can happen. But I want to stop talking. Jesse, I want you to frame this. And you did a little bit of that framing when you said that you think it can eat into a lot of the fixed income market demand that's out there. So talk us through that and what Michael's trying to do here.
Yeah, so this has been very interesting for me, partly because part of how Saylor is thinking about this is referencing a chart of mine. A lot of people have seen the $900 trillion global asset landscape chart that Saylor likes to include in all of his presentations now. And the point of that is to show how small Bitcoin still is, about $2 trillion out of $900 trillion of global asset value. So about 0.2% of the world's value is in Bitcoin, and everything else is in analog store value buckets. 300 trillion of that is the bond market. And those are numbers that had to go do the legwork to figure out how big are these different buckets in the global asset landscape. And because there wasn't a picture of that, a starting point of here's the lay of the land and how much value there is in the world. And I wanted to do the exercise of figuring out what's the full potential valuation of Bitcoin. That has to start with, well, how much value is out there and how much could Bitcoin siphon away from existing store value buckets over time. So that was the exercise I did and put out in Bitcoin's full potential valuation, an article a couple of years ago that Saylor liked a lot. And he started using that chart and then also that valuation framework in his Bitcoin 24 valuation model.
So this is the one that Jesse built that Michael has been using, which I also used in a presentation. I think everybody,
a lot of people have been using it. It's a helpful starting point, I think, for
sure. But for people that are looking on YouTube or the video of this, you can see the chart that we're referencing.
Yeah. So with that starting point, Saylor has been thinking in terms of this framework for the last few years. And I see him talking about it and thinking in that way in his interviews. Most recently, he did an interview a couple of weeks ago where he said, we're tapping into the fixed income market. There's $300 trillion in fixed income. And so I want 1% of it.
Mm-hmm. And
that's very revealing about what these recent steps have been designed to enable for strategy. I think that these vehicles, Strike and Strife, the point of them is to be able to receive up to $3 trillion of capital from the bond market because strategy is able to offer a more attractive deal than what you get really anywhere else in the fixed income market. So if you're a fixed income portfolio manager and you're trying to figure out, how do I outperform? How do I deliver yield to this portfolio that I'm managing that has to be fixed income, has to be bonds, basically? Strife's effective starting offer is 11.8% of annual dividend, basically annual interest to buyers. That's pretty incredible, especially if you understand, MicroStrategy is very over collateralized and has a much stronger balance sheet than I think people realize. And also, Bitcoin is less risky than people tend to believe. So if you're a portfolio manager and you wrap your head around, actually, this is mispriced risk, this thing shouldn't be 11.8%. The actual risk here is more like 5%. Then you've found alpha, basically. And that's your way to outperform your peers and, get a promotion, basically. So I think that there's a ton of capital in the bond market that's constantly looking for the best, risk-adjusted returns out there. And because of the Bitcoin Treasury playbook that Strategy is deploying, they have an edge. They have alpha that they're offering to the market. You can participate in this. You can basically ride Bitcoin and outperform everything else. And all you have to do is hand over your dollars to Strategy, and they will convert that into Bitcoin for you and be able to service this debt at a mispriced risk rate, basically paying you more than the risk you're taking, because it's actually less risky than people realize.
Yeah. Something else that I find interesting about doing this preferred, but it performs like fixed income, is that if he wants to issue more shares, he can just keep issuing more shares and raising the cash that's generated from issuing those more shares. And then he just has a bigger dividend. I'm calling it a dividend expense as he issues more of those shares. And so the amount, correct me if I'm wrong here, goes up to $21 billion worth of preferred stock that he can issue total to continue to just basically issue more stock, get the cash, buy more Bitcoin.
You're talking about Strike specifically, right?
Mm-hmm.
Yeah. So there's been a fast sequence here of things that have rolled out from Strategy. They launched the Strike preferred stock not that long ago. They got it off the ground with a couple rounds of initial investment into it. And then they recently announced that they're doing a $21 billion at the market program, meaning that they're telling the SEC we're going to be issuing up to $21 billion worth of new shares of Strike over time. And we're going to sell that directly into the market. And this is really, I think, what people should know about these vehicles is like, this is why they exist, because Strategy to date has had to go through individual convertible notes. And that takes time. You have to draft the document.
And money. Yeah.
And money, right. There's a lot of friction involved in an individual security issuance, and it takes time. And I think that the time part is a big part of the frustration for Strategy, because they would announce a convertible note, they'd work on it, they'd announce it, they'd price it, they'd go sell it to the market, they'd close the round, that they'd take those funds and buy Bitcoin. That would take a month or two or three. And you're not able to capitalize on market conditions if you're on that kind of timescale. But with an at the market program, if MicroStrategy's stock suddenly spikes, or more particularly, if Strike is traded at a market price that is favorable to Strategy to issue more shares, they can do it. And they can just, create more shares out of thin air, basically new promissory notes to that shareholder, that new shareholder, and take those dollars hand over fist up to $21 billion for now. And that's just an arbitrary threshold. They can announce to the SEC that they're going to raise $210 billion next through these same vehicles. And so I think like the next step would be to roll out an at the market program for Strife, probably a $21 billion one, because it's a meaningful number for Bitcoiners. And then they'll just keep selling into the market. And meanwhile, they're educating institutional investors, the credit agencies, and trying to get the word out about like, this is mispriced risk. We're giving you a great opportunity. And the reason we're doing that is because we know we're going to make 30 to 60% a year by buying Bitcoin. And we're willing to give you 12% a year to do that. And you're not going to get that anywhere else. So I think that's the machinery that they're setting up here, which will allow them to sell directly into the market with no time lag. They can do it same day whenever conditions are favorable to them and get dollars. And those dollars can be used for working capital. So this gets back to the question of like, how are they going to pay the interest expense going forward? And I think, I don't know this, but I think my speculation is that we've reached a milestone for what Strategy can do using its existing business and existing cash flow.
Yeah.
And so I think that they are comfortable with servicing debt using newly issued debt going forward. Or, whatever other instruments they have. At this point, they have 4 different ways they can get dollars through capital markets. And in Strife and in Strike, they note that the funds from selling new shares into the market can be used for either acquiring more Bitcoin or for working capital. And so working capital is an umbrella term, but can include, servicing debt.
Yeah. Yeah. So the 4 ways that you're effectively referencing is they can just issue more common stock right on the face of it and collect cash. They could do more convertible debt deals to raise cash, which is more time and more expense to do. They could go out on the strike, which is the first preferred that they did at 8% that they can either pay in cash, the dividend, or they can pay in more common stock, or they can go out on the 4th one, which is the second preferred, which they have to pay in cash at 10%. So those are the 4 different ways. And basically what you're saying is, and I identified earlier, that they basically have call it a $25 million hole on an annualized basis to cover just their interest expense and this cash dividend that's going to exist. And what they can basically do is just tap one of those dilutive actions. And, Bitcoiners will tell you it's accretive dilution. And I'm one of them. And so what they'll say is they're just going to tap that, and that'll offset the 25 million that's in their delta. And as long as Bitcoin continues to grow at, call it 25 to 50% annualized, this is something that the market is never going to have an issue with, because that pace at which that's growing is going to outpace all of this gap in their earnings capacity. To me, this seems like they are absolutely maxed out as far as what they should take on from an interest expense standpoint. And this is basically the play. And then you had mentioned that as they're looking at tapping the quote unquote ATM of these 4 different sources, all they're going to do is they're going to look across the breadth of those and say, all right, which one is most undervalued to us as the issuer of these stock certificates and debt certificates. And let's just lean into that and take advantage of whatever one's priced most appropriately to our advantage.
Exactly. And he talked about this in a recent interview of these. He views these 4 levers as, what he's going to be pulling. One important note in there is that he is totally comfortable with issuing new MSTR shares at the market whenever the premium gets too high, quote unquote, in their view, such that they can raise capital by selling new shares into the market and driving down that premium. Now they've got working capital that they can use to service this debt. It's all part of this game of like pulling the different levers at different times in order to raise more capital to turn into Bitcoin. And all this capital is coming from the bond market ultimately. So, I think that the key mental image that I have now of Strategy is that, and I think Saylor's quite aware of this. He's thinking about that $900 trillion chart, and he's thinking about, how do I accelerate capital flow from these buckets into Bitcoin? And what he's built with Strategy is a pump to take capital from the bond market and pump it into Bitcoin. This process was organically happening and it will continue to happen slowly this osmotic pressure of, there's a lot of capital sitting in bonds getting not great returns. Bitcoin offers better returns. So organically, osmotically, capital flows as people realize maybe I should sell some of my bonds and buy Bitcoin. But strategy is now designed to accelerate that flow of capital from the bond market and into Bitcoin because they're offering deals that you can't get elsewhere in the bond market. And what's powering those deals, what's fueling that is that Saylor understands that Bitcoin's going to appreciate in value 30 to 60% a year, and that's going to power all of this.
Jesse, I want to show folks with this graphic that we keep popping up, just kind of what Saylor's laying out as far as where he sees the current asset allocation from a global context to where he sees it going in the next 2 decades, and how you're talking about tapping into this. So this is the chart as of today, 900 trillion total global assets. And Jesse, you've referenced this 300 trillion just for bonds, and that is really what he's going after. If you go to this slide, this is where he's saying we're at in 2045. And what I would like the person to kind of look at is the total global value isn't 900 trillion now, it's 4,000 trillion is the number that he has listed for everything collectively here. What I find fascinating is if you take the original 900 trillion and you compound it at 8% through this 21 years that he has laid out from when he did this presentation, you come up with exactly 4,000 trillion.
Mm-hmm.
What he's doing is he's just showing the expansion of, global M2 or US M2, and using that as, hey, these fiat monetary units are going to continue to grow. And if they do, this is how I think these major buckets of asset values are then going to be priced. What's interesting is bonds, it goes from 300 trillion to 840 trillion. But if you're looking at it as a ratio from the total global amount of 900 to 4,000, what you see is that it's a reduction in the ratio. And what I did is I took these 2 charts. The one on the left right there is the first one we were looking at. The one on the right is what this is 21 years later. But then what I did is I showed like a multiple of each one of these categories to show where things are leaking and where things are being basically propped up or life basically being breathed into them. And just the total number of units going from 900 trillion, and this is this top line total units, 900 trillion to 4,000 is a 4.4x multiple over those 21 years. So anything under 4.4 is something that's losing value over that period of time. And anything above that is gaining value or getting more valuable over that period of time. And what you can see is down here at the bottom, his projection is that Bitcoin's going to go 140x as opposed to what every other category, if everything just remained neutral and everything was just being, inflated by, the monetary units, it'd just be 4.4. And where you see everything basically coming out of is gold and bonds. It's interesting to me how he has taken your chart and really kind of expressed it and talked about it in what I think is a really thoughtful way.
Yeah.
And his whole thesis as to, well, why is this all accumulating into Bitcoin and not going into fixed income? And it's like, there's no tax ramifications if you never sell. You don't have to sustain it like a property. You don't have to do like all of these different things that, you listen to any conversation that he's having, he's laying out all these pieces. But when you look at a chart like this, that's very holistic as to his whole grand master plan of like how he sees Bitcoin playing out, all those little sound snippets and all those little sound bites help you to see this and visualize it way clearer as to why he thinks that so much of that value is going to come to Bitcoin. And these 4 things that we just talked about within his company are, how would we describe them? Almost like volatility capturing,
pumps.
Yeah.
Yeah.
Pumps of legacy financial tools to pump that value into Bitcoin from, what Wall Street, all this jargon and all these terms that we're throwing around. He's using those mechanisms to point all that buying power towards Bitcoin. It's really fascinating.
Yeah. Yeah. You nailed it there. That's his whole understanding. What's going on is that bonds and gold and fiat money will lose some of their monetary premium. In the economic conditions that we're in now and will continue into the future, they will underperform, bonds in particular. And so capital will flow out of that in seeking greener pastures. And there's no more appealing place than Bitcoin because of its increasing scarcity, terminating an absolute scarcity in an era where you have abundance with fiat money printing, and the fact that it's early stage in adoption of this technology. So you can expect 50% CAGR, and that's what he's built into his model. So I've been doing a series of threads breaking down the what's in the Bitcoin 24 model, which is Saylor's is iteration built on top of my full potential valuation framework, where he shows you all of his assumptions of he expects that 8% inflation, real inflation, 8% per year for the next 20 years. And that means everything's going to grow 4.4x. And, all these other assumptions about how different asset categories will demonetize and where real innovation will drive value in equities. And so, he's showing you his entire brain, his entire expectation of how the future will play out just in his assumptions in this model. So I've been having a lot of fun digging into that, and I'm going to continue to show what I've found in there on Twitter and in videos.
Yeah. Something else that I think is important just for context is looking at the balance sheet itself, because we've been talking a lot about the income statement and that $25 million gap and things like that. When you look at the size of that relative to the equity sitting on the balance sheet, I think it's a really important highlight to talk about the health of the balance sheet and what he can do based on Bitcoin's current value. And I think that that's an important highlight. Today, just for context, the company has about 44.2 billion in assets, and it has about 10.7 billion in liabilities. And the balance sheet, that the assets, 42.5 of that 44 is the value of the Bitcoin sitting on the balance sheet. So you have an enormous amount of, just to put this in comparison, $400 million is 1% of the Bitcoin sitting on his balance sheet, just to kind of put that in context, how big these numbers are.
Yeah.
$400 million is 1% of the balance sheet. And so when we talk about a $25 million delta on his income statement, can that be made up with the Bitcoin if he wants? Absolutely, it could be. Does it mean he's going to have to sell? I don't think it is going to have to mean he has to sell, because he can just kind of roll, the common stock as cash to offset that difference.
And that's where the name Perpetual Strife, I think, comes in, because that stuck out to me. So when they announced this latest preferred stock offering, they called it Strife. And they named the prior one Strike because it had an embedded call option, and that's got a strike price. And so that's a relevant term. But Strife is not a term in finance. Perpetual Strife is certainly not a term in finance. So it's a play on words. And there's a big wink, wink significance in there of, it's an adjacent word to strike, strife. It's cute. But I think what he's really getting at, they're calling it Perpetual Strife. And that is a nod to the speculative attack that we talk about in Bitcoin. He has talked previously about, with that $900 trillion global asset landscape chart, he has said that we are in a constant, continuous war between asset classes, and, value flows to whichever asset classes make the most sense at any given time. And that's what Perpetual Strife is hitting on here. That this is a speculative attack on bonds to convert a huge portion of that capital, the $300 trillion sitting there, into Bitcoin, because it is a more attractive asset at this point in time.
So I typed in Perpetual Strife into Google, and it immediately was autofilling Perpetual Strife in the Bible. when I click on this, it says in the Bible, perpetual strife refers to ongoing, intense conflict and discord, often stemming from bitterness, anger, and lack of love and unity.
Yeah, that's quite a wink, wink. Saylor's very good about not, he's made the point of like the Bitcoin and the dollar can coexist. And he doesn't think that Bitcoin is a threat to the dollar. You can sort of read between the lines there about like how much does he genuinely believe that versus how much is that good politics? And you can make it a case either way. But, with this, I think that if you were having a few drinks with Saylor in a private place and you asked him, like, what do you think about holding bonds? I think he would say that people holding bonds are setting their money on fire.
Yeah.
And that you'd be much better off holding Bitcoin. And that's what he's helping people do now. That's what he's designed strategy to do. He is creating a better home for capital than the $300 trillion in the bond market currently have. He probably has a certain amount of contempt for bonds in general, given his expectation about inflation. U.S. Treasuries are paying 4.2%. The 10-year U.S. Treasury is a 4.2% yield right now, but he's expecting 8% real inflation. So you're losing 4% in real terms every year that you hold U.S. Treasuries.
Yeah.
And so, I think that perpetual strife is about as direct of a battle cry as you're going to get from Saylor.
Yeah, and I think this is another interesting way to look at it too. So like, let's say he wants to raise another $500 million by issuing more common stock or issuing more on this preferred, the first one, the strike. So he takes the stock to market, whether it's preferred or common. He raises the $500 million of cash. He goes and buys Bitcoin. In the one, just going to the straight common stock, the dilution of that stock is realized immediately, right? In the other one, the value of that stock, which has no impact on the common stock, which is where, I would imagine the majority of his interest is in the common stock, right? But it does have this lag of diluting the common stock assuming that's what he's choosing to pay it in, which I would assume that's what he is going to pay it in because of the lack of earnings power on a relative basis. So he's diluting the common stock by 10% on an annualized basis, right? So instead of diluting all of that 500 million worth right then and now, he's doing that through 10% increments on an annualized basis to get to the same dilution factor that you would have. And I think that is a really important way of like how to look at this and looking at which one is he going to tap? Which one is he going to raise the cash from? So let's play this out again. Let's say Bitcoin's roaring. Let's say we're at $200,000 a Bitcoin. And now instead of having $44 billion for assets, he has close to, $80 or $90 billion of assets on the books, and the stock price hasn't doubled, it's quadrupled. This might be a scenario where it makes more sense to tap the common stock and the preferred stock, because maybe the preferred stock hasn't moved as much because it trades a lot more like fixed income with respect to the price premium that's put on it. So these are all the choices. These are all the things that he has at his disposal to really kind of tap into to just continue to take these financial tools and transmute the cash that he can generate from stock certificates and turn it into more Bitcoin on the balance sheet. I think it's fascinating. Like,
yeah, it's so interesting. It's genius financial engineering.
Yeah.
And I think it's the biggest story in finance.
Yeah.
And we're going to look back on this as the defining, genius move of this era in public companies anywhere.
Let's take this scenario too, Jesse. If let's say Bitcoin's at 200,000 and everything that I just described as far as like how strong the balance sheet is, because remember, it's not like his liabilities have gone up that much. They've gone up a little bit depending on which one of these mechanisms he's tapping. But you go from a 4-to-1 assets to liability to probably a 6-to-1 under that scenario, or a 7-to-1 under that scenario that we just described. And he's not buying $500 million of Bitcoin in each one of those monthly deals. He's now going out and buying 1.5 billion or 2 billion in each one of the, like the sizing is 4 times more powerful. What does that do as the Bitcoin's getting more and more scarce? So, and we haven't even mentioned, nation states leaning into just one company.
Yeah. Saylor fully expects to source and deploy $3 trillion of capital into Bitcoin. And currently Bitcoin is only $2 trillion total. So there's $3 trillion of buying pressure from strategy alone.
Yeah.
Bitcoin's only $2 trillion. And his model expects that one Bitcoin will be worth $13 million in 20 years.
Jesse, this is where I think we need to go. So somebody who's listening to this that is flirting with the idea of Bitcoin, hasn't been orange pill, but they're hearing all this and they're just like, what am I thinking right now? Okay. That person, if they were sitting here with us right now, this is the question that person would have. They said, this is all based on you just believing that Bitcoin's going to go higher. What if it goes down 75%? Like, none of this is guaranteed that Bitcoin's just going to keep going up. So how do you respond to that person that's thinking that right now as they're listening to us? What if you could grow your wealth effortlessly with a consistent income stream and in a tax-advantaged way? Bitcoin mining with Abundant Mines checks all of these boxes. Abundant Mines delivers a premium, hands-off Bitcoin miner hosting solution at renewable-powered facilities in Oregon, offering low-cost energy, industry-leading uptimes, and white-glove service. Your investment works harder for you so you can stack discounted Bitcoin without the headaches of active management. Their cool and stable climate extends the life of your machines, and if repairs are needed, their team handles it fast and at no extra cost. With in-person exclusive educational events, you get unmatched transparency and insider knowledge. Successful entrepreneurs, investors, and investment funds trust Abundant Mines to optimize their mining profits with significant tax advantages. Get started today at abundantmines.com/Preston for a free gift as a listener of this show. That's abundantmines.com/Preston because elite investors choose abundance. One of the most common questions I get from family and friends is, Preston, where do you personally buy your Bitcoin from? And the answer is really simple. I buy it on river.com. Not only can you buy Bitcoin with 0 fees on recurring buys, but you can earn Bitcoin interest daily on cash balances while waiting for good buying opportunities. And over the past 2 years, these returns have been twice that of most high-yield savings accounts and 16 times the national average, making it a powerful way to grow your holdings. You also have peace of mind knowing Bitcoin on River is held in multi-sig cold storage, fully licensed and regulated in the United States. Plus, their relationship managers are US-based and available by phone for you or your business. Additionally, River has built its own infrastructure from the ground up, meaning it doesn't rely on third parties to function, like a lot of other Bitcoin exchanges. River is setting a new standard in Bitcoin investing. Go to river.com/fundamentals to get up to $100 free when you sign up and buy Bitcoin. That's river.com/fundamentals. Holding Bitcoin is the best way to protect your family from the threat of fiat currency collapse. And few people understand this better than Tony Yazbek, cybersecurity expert and founder of the Bitcoin Way. Tony was in Lebanon when the currency imploded. He's seen the chaos that erupts when the ATMs stop working and the bank accounts get frozen. He knows what it's like to lose everything. But with his cybersecurity expertise and by fully adopting Bitcoin, Tony was able to engineer his escape. And now Tony and the Bitcoin Way team work to make sure this never happens to you. With over 25 years of experience, their expert training empowers you to self-custody your family's Bitcoin the right way, secure your devices and protect your privacy, develop robust inheritance plans, and secure for Plan B citizenship. The Bitcoin Way can transform you into a sovereign individual. You just need to take the first step. Schedule a free consultation today at thebitcoinway.com/TIP.
Yeah, we sound crazy on the surface, and that's just how it is. But when you dig into it and you run the numbers, well, it starts to come out to this sort of picture of the future. And I think that the most important thing to keep in mind for somebody new to Bitcoin is it's a once-in-a-species invention of digital scarcity, a perfection of scarcity. It's the invention of absolute scarcity. And by that, I mean, we've never had an asset ever that has an absolutely finite supply. It's just not possible in the physical world. It is possible if you create that system in the digital world. And Bitcoin is it. And of course, we have a bunch of copies of that system, but you can create a bunch more copies, and each incremental copy of the original instance of digital scarcity is itself not scarce. So the only thing that is scarce here is Bitcoin, and it's absolutely scarce. And the entire story of human history is people searching for the best store of value asset to propagate their value today into the future for future use. And what has historically won is assets that have very low supply dilution every year. In terms of monies, that has meant gold, real estate. It's hard to make more real estate, so that's become a savings vehicle for people. They store a lot of value in real estate. And here is this digital perfection of these properties that humans have been seeking forever. And it's tiny still because it's only 16 years old. But if you're thinking about, where can you store value safely for use in the future, and there's only one asset that has zero supply dilution after we get to 21 million Bitcoin, value is going to osmotically flow towards that optimum solution of value transmission through time. And then the question is, how much value is looking for a store of value asset? There's $900 trillion of value out there. Saylor has kind of put a stake in the ground and said half of that is just looking for a store of value. $450 trillion is your total addressable market, what's possible for the store of value category. And then here's one asset that has a finite supply ever in human history, and it's going to keep siphoning away store of value capital from other asset buckets to this, as Trace Mayer used to say, infinitely expandable blueberry. So there's a tiny little blueberry in the global asset landscape, but you can hook up a water main to it and it can expand in terms of its total value. And we're in the early stages of that. So, it sounds crazy that we're talking about $13 million per Bitcoin in 20 years, but that amounts to 7% of the world's assets in Saylor's version of how things play out. So 7% of the world's assets in 20 years, basically the second wave of the internet revolution. We've digitized information with the internet, and now we're digitizing value with Bitcoin. And how much value is out there? Half the world's value. And Bitcoin in the next 20 years is, Saylor expects, going to take 7% of that 100%. So, a chunk of the 50. And that'll be where Bitcoin is 20 years from now. And it won't be done at that point either. We won't have reached the full potential of what Bitcoin can become, because it can take the majority of that 450 trillion, the majority of that half of the world's assets that's just looking for the best store of value out there. So, that's a little context of how I see it. And I'm pretty sure that's how Saylor sees it as well when he's thinking about what Bitcoin is and what it's on track to become.
Yeah. I'm curious, have you been paying much attention to Howard Lutnick and Elon and everything that they're doing from a government standpoint? I just recently listened to an interview that they were interviewing Howard Lutnick, and he basically framed his role as basically watching the top line or improving the top line, where Elon is really trying to manage all the expenses to really balance the budget. What are your thoughts on some of this? And then more importantly, what are your thoughts on how it relates to this discussion point that so many Bitcoiners will throw around, which is that the M2 growth rate of, call it 8% on a global scale, it's more like 12% for M2, that there's no way that growth rate in M2 is going to slow down. It's just going to continue to persist moving forward. How do you think about that in the face of the current administration that's trying to bring in a budget that's balanced?
I think it's a noble cause. The idea of trying to cut in order to get back to balancing the budget is long overdue. We haven't balanced the budget in 23 years now. We've normalized multi-trillion-dollar deficits every year. I don't think that it's possible to get that much out of the budget because there's so much of it is entitlements. So I think the reality of red tape in Washington will prevent them from cutting $2 trillion is what they need to cut in order to balance the budget. Or really, a third of government spending, if you think about it that way. And that's just not going to be possible because so much of it is entitlements and military spending, and all of that is very sticky and contractually so.
And it's just the US we're talking about. I think that's the other point that's important for, the other side of this argument, not to butt in, is just we're only talking about the US. It's not like Europe's got anything under control. It's not like the UK or Japan or China or anybody's got any other budgets under control. It's truly a race to debase globally relative to the US that's trying to be responsible. We've seen like 2 months of
Yeah, after 2 decades of just blatant irresponsibility. So I'm just old enough to remember in the 90s, both sides of the aisle would fling at each other about balancing the budget. This was like a major point of pride that like, oh, we're going to balance the budget. And you haven't heard that in politics for 10, 20 years. They're asleep at the wheel. Everybody likes spending. And the electorate hasn't cared enough to demand fiscal sanity from their politicians. Instead, we've been, fed wedge issues to, rile up both sides of the aisle. And, spending accumulates in the wake of, sort of Ron Paul voices actually getting the floor. That's been going on for long enough. You can't rein that back in. Like if you look at the math of where we're at with the national debt, 36.5 trillion, we're close to 130% debt to GDP. I love the anecdote of 51 out of 52 times since 1800 that a country's gotten to 130% debt to GDP. They eventually defaulted, soft defaulted, or hard defaulted. One example is present-day Japan, which is sort of spiraling deeper and deeper into eventually having to default. So, once you get to that level of debt burden, it's game over. And we are heading in that direction at a pretty rapid clip overall. Yeah, they've managed to sort of pull back from balance sheet expansion that happened in COVID briefly, but now we're seeing, that brief moment of austerity ending. And we're going to have the next leg up in balance sheet expansion. We'll go over 130% in the next few years. And, this only goes one way. It heads towards the big print that Larry Lepard talks about. This is nothing stops this train, like Lynn Alden says. There's only one direction this goes. That's what Saylor's baking into his expectations. We're going to print more money. We're going to print more money. That's soft defaulting to service our debts and devalue the debt that we owe. That's the burning platform for why people would exit bonds and seek greener pastures elsewhere, because you're losing in real terms every year that you hold bonds if real inflation is 8% and they're paying 4+%. So, that's the climate we're in. And that's the backdrop for Saylor's expectations about why Bitcoin is going to become, going to expand rapidly over the next 20 years at the expense of bonds in particular.
Jesse, in your opinion, for people that are maybe listening to this and a little skeptical, and I guess your overall view of where we're at from, the stock market and just the broader economy, what is it that you see happening right now that everybody else is missing? Like, what's the so what that you're looking at and saying, if people could just understand this one thing, I think it would really help them out a lot?
I think it's that. I mean, the entire financial sector is predicated on the idea that interest rates are what U.S. Treasuries are paying out. That's the risk-free rate. If you receive the risk-free rate, you're treading water on inflation. When I think about my chart, $900 trillion of value out there, a third of it is sitting in bonds, which the whole point of that is tie up your capital and you'll receive the risk-free rate plus some small additional percentage. But if the true inflation rate is M2, which I believe it is, and if you ask a working class family, do they think that inflation is 2 to 3%, or do you think it's been more like 10% every year for the last few years or more even, they're going to choose the latter. When you get your groceries and that receipt tells the story for you, that's real inflation. And they can massage the numbers however they want to, and they do, to make it look like things are not like that. But the reality of it is that the real inflation is 8, maybe 10%. And if your investment is not generating 8 to 10% or more, you're losing value. The entire financial sector is predicated on US Treasuries being like a fine place to store your value, park your value, to tread water on inflation. And all the bonds that are on top of that, all the bonds between 4 and 8% are also destroying value. And that's probably the majority of the $300 trillion sitting in the bond market. So the alpha that Bitcoiners have outside of, Bitcoin's properties is that there is a burning platform of, you can't have a 60-40 portfolio where you've got 40% of your value parked in fixed income. You're destroying in value in real terms every year that you do that. And I think Bitcoiners have come to understand that, in part because of like Jeff Booth's perspective on the price of tomorrow, and the escalating amount of debt printing needed to drive any real GDP growth, and how it's 4-to-1 and getting worse. And so Bitcoiners understand you can't just take that proposition, and for other reasons, you also come to learn why Bitcoin is extremely attractive on top of not being bonds. I think that's the story of the next 20 years, and I think that's what Saylor's keying in on. I see how he thinks, because on this particular point, because he locked on to what I was seeing and thought that he's onto something here. And so I think that that's his roadmap of what happens going forward, is we demonetize bonds most of all, and that AI and other technology will drive real value for equities. So equities will be winners over the next 20 years. Pretty much everything else is a loser or treading water. And then Bitcoin is the massive winner over the next 20 years.
I think this is important too. It's a winner in terms of fiat, not in terms of Bitcoin, right? Because going back to that comparison of the chart here, I'll pull it up. If we look at this chart and we say the baseline is that the fiat itself is going to grow at 4.4x over these years, and we look at equity and it does a 7.39x, it's outperforming the fiat growth rate.
Right. Yeah.
Right. So
it's a winner. Yeah.
It's a winner in terms of fiat. But when you compare it to the 140x that we expect Bitcoin to do, and if you're using Bitcoin as your unit of account, you just got bludgeoned.
Right. You're losing in Bitcoin terms by holding any equities over the next 20 years. And that's how Bitcoin maximalists end up looking like crazy people, is because you get deep enough into these details that we've walked through, and you start to realize, wait a second, the best asset, the only asset that I really want to hold is Bitcoin, because I don't want to be losing in Bitcoin terms by holding anything else that's going to get absolutely bludgeoned in Bitcoin terms over the next 2 decades.
Yeah.
And that's how you end up going from a 1% allocation to Bitcoin to, maybe I should be 5, 10. I'm comfortable with 25. Yeah, actually, you know what? I think I should have at least 50. I want the majority of my portfolio to be in Bitcoin, and then suddenly you're a Bitcoin maximalist. And I think that's the path that so many of us have gone down.
Jesse, it's how you go from just issuing a bunch of common stock and buying Bitcoin, doing convertible debt deals and buying Bitcoin, and doing 2 preferred shares, issuance, and saying you're going to do $21 billion worth of preferred share issuance. I think to the outsider, I think to somebody sitting on Wall Street that's done this their whole life, they're looking at this and they're saying, this is the biggest Ponzi scheme I've ever seen in my entire life, and I can't wait for it to all blow up. And I think, they take their short position, and I mean, those short positions are just rocket fuel for the common stock of MicroStrategy when Bitcoin even moves 20%.
Yep.
Right.
Yep.
So,
and yeah. And that accelerates everything for MicroStrategy, for strategy.
It just keeps the flywheel going then, right? Because then it keeps doing more of it because they went short and they blew up, and yeah, man, we could talk about this all day. All right. Final question for you, Jesse. What are you up to these days? Anything exciting that you want to tell us about?
Yeah. So I'm I've been putting my management consulting skill set to use lately, doing a 1 to 2 sort of slide threads every week on Twitter. A lot of it has been on strategy and their various vehicles right now and Bitcoin 24 model. So I look forward to keeping doing more of those. I've been also writing an article that I'm quite excited about a topic that you and I talked about on this show in 2021. And it's been just rattling around in my brain ever since. And I'm finally putting it into an article. And in the course of that research, I've found some pretty cool stuff that I think helps explain the significance of Bitcoin for us. And I think for Bitcoin maximalists in particular, part of why we get so excited about Bitcoin when you really understand it.
Is it going to be better than your yuppie elite article? Because I don't even know that that's possible.
I don't know how people will receive this one. It's at the moment, it might be my favorite thing I've ever written. So,
wow.
Yeah.
When's this coming out?
Probably in the next couple of weeks.
Okay. All right.
It's a kind of interdisciplinary pulling together of anthropology, neuroscience, and Austrian econ and Bitcoin into something that I'm pretty excited about. One anecdote that I've come across that I found pretty cool that people will enjoy is I thought that the oldest use of money was 75,000 years ago. That we've found shell money from cave sites that goes back 75,000 years. But I didn't know that in the last few years there have been a bunch of discoveries that are even older. And now the oldest documented use of shell beads is 142,000 years old, which is half the time that human beings have existed, Homo sapiens sapiens have existed. That goes back 300,000 years in East Africa. And so that probably means that we've been collecting shell beads for our entire existence as a species. And some of the other findings that I've come across on the neuroscience side of that may confirm that, may speak to that as being core to who we are and how we think, which then helps explain why Bitcoin is so exciting, because this is the fulfillment of what we've been searching for 300,000 years, potentially.
Oh, that sounds super interesting. You got to make sure that you share this with us when it comes out. Anything else that you want to highlight from the business standpoint before we close it out?
Yeah. So I'm also a co-founder of OnRamp, and we've been pioneering multi-institution custody. So multi-institution custody is a form of multi-sig custody where institutions hold the keys on behalf of the end user. So in that way, individual doesn't have to set up and maintain any keys as part of this multi-sig setup. Instead, you have 3 separate institutions doing that on your behalf, and that removes all that technical and security burden from the individual. So we're very excited about that product. It's been very well received. People like using it, and the team has been doing a great job kind of rolling out what's possible there with the properties of multi-institution custody and scaling up that awareness of that as an option for individuals who are looking for self-custody or other custody options out there.
Well, Jesse, thank you so much. We'll have links to that in the show notes. Love having you on the show. You're such a deep thinker. And honestly, I think these charts that Saylor keeps using that you generated here are just, it's so easy to visualize and see it and just kind of really make sense of it all. And I know I'm using them in my own presentations that sometimes I'm giving talks at. So really appreciate having you on the show, and just keep up the great work, man.
Yeah, thank you. Thank you, Preston. I'll be updating that chart for 2025 numbers soon. So I'll be putting that out on Twitter at Croesus_BTC for anyone who wants to get that.
All right. Well, until next time, thanks, Jesse.
MicroStrategy started the year with 189,000 Bitcoin, and they ended the year with 446,400 Bitcoin. So, they started with $8.3 billion of Bitcoin, and they finished the year with $42 billion of Bitcoin. And the price has gone up astronomically over the entire year.